I'm Danielle, and Kyle, Brennen, and Hannah and I will be presenting the Microsoft case study. So we'll begin by looking at the case history. The title of this case is From Gates to Satya Nadella, and it begins in the early stages of Microsoft with Bill Gates as CEO from April 1975 to January 2000. During this time, Microsoft's biggest sources of success came from the Windows operating system and Office. Microsoft then began to formalize both their managerial and product development structures because in the past they had been known to be pretty chaotic. So Gates began to hire on business leaders to bring organization and discipline to different divisions. In the year 2000, Steve Ballmer became CEO and product diversification increased to include Xbox, tablets, smartphones, internet search, etc. And despite increasing revenues during the Ballmer years, Microsoft's stock price did drop and then it became stagnant. So they began to look for new leadership, and in 2014, they named Satya Nadella CEO. Nadella then began to take on the new cloud-based era. To look further into the case, we're going to use a SWOT analysis. Microsoft's major strengths included their ability to closely follow industry trends and consistently innovate and diversify their product offerings to meet consumer needs. A huge advantage of acquiring Microsoft as a company would be their level of success at both the enterprise and individual consumer segments. In addition to that is strong leadership. By the time Nadella became CEO in 2014, he had already spent 22 years at Microsoft, so he knew exactly what they needed to do to quickly change both their culture and product offerings in order to compete in the new cloud-based world. On the other hand, their flaws included past struggles with managerial structure and product development processes. Piracy and antitrust issues were also a weakness for Microsoft. Developing nations did have a really large market for Microsoft products, but they also had extremely high rates of piracy. Another notable weakness was the loss of their leadership position in the Ballmer years. Since Microsoft was popularly regarded as #1 in the industry while Gates was CEO, any drop in that position made investors concerned that new leaders would beat out Microsoft as industry trends shifted. However, as Gates said in 2014, the opportunity for Microsoft was greater than ever before. The opportunity to lead the new era of cloud computing would bring huge success to the company since the cloud industry was projected to grow exponentially in the coming years. And that brings us to threats, which included significant expenses and competitive challenges in the world of mobile devices and cloud-based offerings. Apple, Amazon, Google, Oracle, IBM were all companies competing in the same arena, and they were all very strong competitors. To look more into the environment that Microsoft is in, we're going to be using Porter's 5 forces. So the bargaining power of suppliers is moderate. Almost all companies in the tech industry buy their raw materials from numerous suppliers. So while business does depend on supplier conditions, they're still in this competitive rivalry, so it limits the influence of the suppliers. So bargaining power of buyers is also going to be moderate, and this is because customers definitely have ability to determine the company's performance, but they have access to various competitors, but there are moderate switching costs, so that limits their power as well. And the threat of new entrants is also going to be moderate, and that's because it would be really expensive for a new business to compete and gain market share against Microsoft and its competitors. But since the market is growing and projected to continue growing, new entrants may be very attracted to the industry and willing to sacrifice a little initial capital. The threat of substitutes, however, is pretty weak because mechanical, manual processes definitely tend to have lower performance compared to Microsoft's current products. And competitive rivalry would definitely be the strongest force affecting the industry. Microsoft would have to increase its research and development efforts along with improved product development in order to maximize their competitiveness against other firms' products. So the central problem of the case is whether or not Microsoft will be able to compete and be successful in the mobile-first, cloud-first world under the leadership of Nadella. To combat the challenges that Microsoft is facing, they need to follow these 3 major objectives. Number 1 being to increase the revenue and market share of cloud-based offerings in order to combat decreasing sales of traditional products. Number 2 is that Microsoft's culture had often been called pretty bureaucratic and political, so they would need to shift their culture by limiting the number of people involved in decision-making, streamlining engineering processes, and driving greater accountability. Number three would be to ultimately regain position as industry leader by creating strong competitive advantages to not only attract investors, but a loyal consumer base as well.
Thank you, Danielle. Let's take a look at Microsoft's corporate goals and mission. For Microsoft, this means being a leader in the many niches of the technology industry and recapturing market share from its direct competitors in Amazon, Sony, and Google. While Microsoft values the many different segments they're involved in, becoming a leader in the cloud computing industry is of their highest priority. Let's take a look at our first corporate strategy, horizontal integration, and our second, related diversification. So for the first aspect of their corporate level strategy, Microsoft uses a horizontal integration strategy because of their position as one of the biggest competitors in the tech space. Microsoft uses a strategy of related diversification when it comes to establishing new businesses. Microsoft has also acquired companies from various segments such as Skype, Yahoo, and Nokia. These strategic acquisitions are made with the intention of competing with industry leaders. The truth is that not all of their acquisitions have been successful. For example, Microsoft's acquisition of Nokia for their first smartphone line resulted in substantial losses. However, Microsoft's acquisition of Yahoo proved to be quite successful. It's important for Microsoft to keep assessing other companies for acquisitions due to the potential upside. Our next corporate strategies are strategic outsourcing and alliances. Microsoft manufactures a lot of their products, such as the Xbox, under contract at low-cost global locations. This strategy allows Microsoft to save millions of dollars in operating and production costs each year. Not only that, but Microsoft programs like Office 365 can be found in the Apple App Store. Even though Apple is a direct competitor, Microsoft cannot ignore the industry dominance of Apple and realize they could actually benefit from it. These type of strategic alliances help influence a greater segment of customers. So for our first functional level strategy, we decided to look at the value chain analysis. Microsoft has been able to boost their efficiency by holding their supplier to high quality standards, all while lowering costs. Because Microsoft operates in a variety of different divisions, their products can be sold through many different networks, effectively generating greater revenue. By selling products cheaper than that of Apple, Microsoft conveys a strong value to the customer. And lastly, by placing a high emphasis on customer service, Microsoft is better able to build a superior customer responsiveness and loyalty. The second functional strategy that we used was the VRIO analysis. To start, Microsoft has been in the operating system game for over 3 decades. This has afforded them worldwide brand recognition and value. And while it is true that on rare occasions, Microsoft products can suffer from poor performance and reliability, Microsoft implements a total quality management philosophy, which has helped establish their credibility as one of the most reliable technology brands on the market. Microsoft is viewed as a brand that constantly strives to invent and improve their product offerings. As for their temporary competitive advantages, the Windows operating system is the default system for computer manufacturers. With that said, if companies decide to implement their own operating systems, it would adversely affect Microsoft's dominance in that sector. So moving on to our first business strategy that Microsoft uses, we decided to take a look at their broad differentiation strategy. A lot of the products that they release are unique in features, such as software products specifically designed for business organizations. This allows their products to be sold to a wide audience, such as students, organizations, and households alike. It's also important to note that some segments, like the Windows and Office product spaces, are at their maturity stage, and they're not bringing the revenue that they used to. However, Microsoft easily counters this slowdown with the successes from their other product lines. One other business strategy that Microsoft uses is market penetration. Microsoft has a long-standing history of affordability and reliability. Their affordable price points allow greater purchasing power for those in the middle class. And thanks to strategic partnerships with computer manufacturers such as IBM, products like Windows are made available to the masses at low cost. This helps introduce and familiarize customers with Microsoft, which helps strengthen their branding and overall appeal. Microsoft's diverse product lines make purchasing multiple products easy and thus help Microsoft gain a wider audience. Customers can range from children to adults. And for our last business strategy, product development, this is one of Microsoft's primary intensive strategies. They operate in a rapidly changing and highly dynamic tech industry. And so whether it be releasing new versions of Windows, the Xbox, the tablet, or the Office suite, Microsoft is continuously focusing on product development to remain competitive with rivals like Amazon, Apple, and Google. The creation of new products and services is a critical business strategy for Microsoft. Since it's so important to stay on top of emerging trends, Microsoft is fully focused on the continuous development of their high quality and affordable cloud service, Azure. Without the presence of Azure, Microsoft will be missing out on billions of dollars in revenue. Product development and innovation will be key moving forward. And with that said, I'd like to pass it to Hannah.
So innovation is a very important part of the technology market. And like all other companies, Microsoft has a goal to become a premier cloud-first, mobile-first platform. So Nadella had some strategies that he wanted to implement to make this goal happen. So a big part of this was through Windows 10 and cloud computing. So his Windows 10 program, he decided to take a note out of Google's strategy and to make Windows 10 free on devices under 9 inches and also free for Windows 7 and 8 holders if they downloaded within the first year of Windows 10 being released. He also focused a lot on cloud computing programs such as Office 365 and made this software available on iOS applications. So that means that you could download this in the Apple App Store, even though Apple was one of their big competitors. So by implementing these strategies, he was trying to get Microsoft back out into the world and out onto these mobile-based platforms. So after reviewing their innovation strategies, we had some recommendations to help them in the future. We decided that a strategy canvas could be very helpful for Microsoft because Microsoft needs to determine how they can differentiate themselves from their competition. And a reason why we thought this would be very important is because throughout past history, Microsoft has seemed to trail behind the competition in leading the market. One good example of this is with Microsoft smartphones. The second Androids and iPhones entered the market, Microsoft kind of became obsolete because they did not differentiate their product enough. Another strategic advice that we would give them is to use the technique of subtraction and reduction. So with big innovation projects like cloud computing, they should try not to make this product overly complicated, especially because the cloud market is a new emerging market. We think this would be helpful because Microsoft Vista was a huge flop because they made the product way too complex. It had over 50 million written codes and it was overly complicated. It was causing the user's computer to die very quickly, and it was also over budget and 2 years past due. So because it was so complex, it didn't work out very well. Another strategic advice that we would give them is a close relationship between the research and development teams and the marketing teams. They should work closely together to ensure that the project's vision is created correctly. We think this is very important because the Microsoft search feature was having to be rebranded over and over because it didn't resonate with the customers and the product didn't have a clear vision in how it was marketed. So the company structure of Microsoft was composed in unique business units that were autonomous. So there was the Windows unit, the Windows servers and tools, and the Office unit. And all of these kind of did their own thing with many levels of management. On top of that, finance, HR, legal, and the marketing departments kind of cut across all these units, making this a loose matrix system. So this did not fit into Nadella's strategy because he wanted a very streamlined process with only a few people involved in the decision making. So when he came in, he really changed around this structure. Their control systems, on the other hand, were a little bit more streamlined and efficient. Each new innovative product started out with a project manager who specified the vision, the key features, and the development schedule. And then the developers would then take what the project manager said and implement this vision and the features. And then the testers would test the product to ensure there was no glitches or bugs. And so this was very efficient because for every developer, there was one tester double checking their work. So it made sure every product was to Microsoft's top quality. And so in 2014, Satya Nadella came out with a goal to maximize value of technology while also preserving the values that are timeless. So his corporate social responsibility strategy was to invest in green energy for cloud computing technology and to make sure Windows was compatible with other products because they had a problem with antitrust issues back in 2002. So we would just suggest to them to continue to avoid these antitrust issues by creating systems that are compatible with all different third-party producers.
All right, thanks, Hannah. So we're gonna go ahead and start by analyzing Microsoft profit ratios. You see in the blue, we have a return on investment capital. You can see that this is higher than many of their industry competitors. This means that they're achieving greater profitability by being more efficient than their competitors. Return on assets is in red. You can see that is average or even a little less than industry competitors. This isn't something to be worried about. It doesn't affect our outlook on the company. Next, we have liquidity ratios. So Microsoft's current ratio on the left here is above industry average. As you can see, it's in the 2s compared to the industry average in the 1s. This suggests the company has sufficient resources to pay its debts over the next 12 months. You can see the ratio consistently stays above 1, but doesn't go too high. This means that the company efficiently uses its current assets. On the right, we have our quick ratio. Once again, that stays in the 2s, double that of the industry average. This means that Microsoft will appear safe and able to use its cash or quick assets to meet its short-term liabilities. And overall, as an investor, we shouldn't fear Microsoft's ability to meet any obligations. Next, we have leverage ratios. On the left, we have debt to equity. Blue is Microsoft's, red is the industry average. Microsoft's debt to equity ratio, lower than the industry average, suggests they aren't very aggressive when it comes to financing its growth with debt. This actually means that more of their growth is done so organically than the rest of the industry. It's not a bad thing. On the right, we have our leverage ratio. That's slightly higher than the industry average, just by about 8 basis points in December 2014. The leverage ratio being slightly above the computer programming and data processing industry average suggests that they use a fair amount of operating profit to pay its liabilities. Although this number for the previous 2 years is not any concern and does not mean that they wouldn't be able to find new lenders. Next, we have some shareholder return ratios. On the left, top left, we have price to earnings ratio. Their PE is actually rather high, which tells us that investors are willing to pay a higher share price because of growth expectations in the future. You can see it doubled from January 2014 to January 2015. This means that their price per share is slightly inflated in relation to their earnings per share, but just because it is high does not correlate to as much as the strength of the company as it does just an inflated stock price. On the right, we have the market to book value ratio. Since the market to book value ratio is above 1 in all 3 years analyzed, this means the stock price of the company is trading for less than its worth in assets. This is good for any retail investors looking to buy a value stock at a low price, and it helps us to analyze the company and realize it is not overvalued yet. Bottom middle, we have the dividend yield. It is steady, consistent dividend yield. This signifies to us that Microsoft has been consistent in its dividend payments to go along with rising stock price. One of the biggest indicators when you're going to invest in a company and making sure it's strong is that they're able to increase its dividend, and Microsoft has been able to do that more quarters than not. Lastly, for financial analysis, we have activity and cash flow. On the left, we have free cash flow in millions. When considering investing in a company, of course, you want to make sure that they're generally generating free cash flow and that it's increasing. And although it's not here, it's good to see that they're ending up with a fair amount of free cash flow at the end of the year. We'd assume in 14 to 15 that this drop off could have been due to greater fixed costs associated with new cloud technology that their new CEOs introduced. And there's still plenty left over at the end of the year, so we're not concerned about the cash flow. On the right, we have inventory turnover ratio. We can see that rate has actually slowed down substantially. However, that is not a concern either, as this can be expected when a company is focused on major cultural change and essentially rebooting under Nadella. Nadella's main goal is to streamline processes, so we'd expect their inventory turnover ratio to increase in the coming years. Next, we have our recommendations for the company. So we recommend they use their competitive advantage in cloud software to increase revenue through Azure. An advantage, of course, in shifting to cloud-based model could reduce IT costs by as much as 80%. Additionally, an advantage taking this opportunity would be for them to capitalize on what's predicted to go from a $10 billion market in 2013 to a $150 billion market in 2020. Of course, there's a disadvantage to this would be an increase in fixed costs that comes from running massive data farms. In order to execute this recommendation, we suggest creating a department specifically focused on data farm and cloud computing technology. Also, of course, working with marketing to create an ad campaign showcasing this revolutionary technology. Next, we have a recommendation to generate greater recurring cash flows through Office 365. So we suggest making it more affordable for school districts and lower income opportunity or communities to own the software by adopting educational discounts when purchased in packages. So a disadvantage to this, of course, would be not capturing true revenue potential had those buyers just purchased them at ordinary rates. In order to execute this, though the white collar market accounts for most of the cloud-based revenue, market the availability of their software to places such as schools and individual families. This brings in the blue ocean strategy, in which by offering discounts for group rates, first-time buyers in school districts, that will open up a new market space and create new demand. And then lastly, our last recommendation we have for Microsoft would be to create greater accountability, flatten the corporate structure as Nadella has encouraged. In order to execute this, we suggest executives and management must build trust within their employees by making themselves available for discussion. Continuous email updates, as Nadella has already started, from management will increase transparency between them and lower level employees. And management should reward departments which are regularly encouraging meetings to increase employee connection. Lastly, to sum up our analysis, we'd like to go over our acquisition decision, and that is, of course, a buy. And 3 reasons listed below. Our first would be the Microsoft's wide economic moat. So they display industry dominance and diversity of product offering means the company will own major market share for years to come. They generate recurring cash flow, high brand power, and switching costs. So when looking at investing in a company, one of the sure things we could look at is guaranteeing a cash flow. That's for certain every year, and Microsoft has established that with their Office 365. Then you look at their industry-leading financials, which I just went over. Financials are a key reference to the true stability of the company. You've seen they lead the industry in metrics involving profitability, liquidity, and leverage ratios, and the company has increased their dividend for the last 10 years. That's a great way to demonstrate the strength of the company, that they have cash in hand in the day that they give back to their shareholders. Lastly, we like to point out their excellent stewardship. Nadella has encouraged a company-wide shift in culture in a letter sent to employees in June 2014. He's known as a company man. That's always what you want to look at. When you're investing in a company, you want to make sure they have trustworthy management. Nadella has emphasized flattening of their organization, which we're actually recommending them to do. He holds more accountability and he obsesses over the customers. And he's actually highly regarded as one of the best forward-thinking executives in the industry, encouraging Microsoft to be the premier platform for the mobile-first, cloud-first world. So that concludes our analysis of Microsoft. We are now open to any questions. If you have any, go ahead and come forward with those. Thank you guys for listening.